Think of a stock trader today, and you probably imagine someone in a high-rise office, staring at 6 glowing computer screens flashing red and green, or perhaps the iconic, chaotic floor of the New York Stock Exchange. We think of high-frequency algorithms, instant global communication, and trillion-dollar market caps. But before the high-speed fiber optics, before the telegraph, and long before the glass skyscrapers, the market was a much grittier, much more personal place. Today, we're taking a deep dive into the origin story of capitalism itself. We're going on a whistle-stop tour of how the markets actually began. From medieval debt collectors in France to pirate-infested waters in the East Indies, and the coffee houses of London where fortunes were made and lost over a cup of joe. This is the story of how we started trading the world. Our story begins much earlier than you might expect. We have to travel back to France in the 1100s. There were no apps back then, no formal buildings, and certainly no internet. Instead, there was a group of men known as the courtiers de change. Now, these weren't trading stocks in the way we think of Apple or Tesla today. Their job was far more grounded. They managed agricultural debts on behalf of banks. At the time, the economy was built on land and harvests. If a farmer owed a bank money, that debt was a physical asset that could be bought or sold. These courtiers were the middlemen. They regulated these debts, traded them, and ensured the system didn't collapse. Because they acted as the bridge between the person who had the capital and the person who needed the investment, they are widely considered the world's very first brokers. It is incredible to think that the foundation of our modern brokerage system was laid nearly 900 years ago purely to manage farm debt. As we move forward into the 1300s, the center of the financial world shifted to Italy, specifically Venice. Today, we know Venice for its romantic canals, gondolas, and stunning architecture. You might even think of Shakespeare's famous play, The Merchant of Venice. But some 200 years before Shakespeare even picked up a pen, Venice was the beating heart of global finance. Venetian merchants were pioneers. They didn't just trade spices and silk, they started trading government securities. The Venetian government needed money to fund its frequent wars, so they issued prestiti, essentially government bonds. Merchants would meet in the city's squares to buy and sell these bonds. But here's the cool part. They didn't have digital ledgers. They would meet with clients and write all the trade information down on a simple slate. When the price changed or a trade was completed, they'd wipe it clean and start again. This was, in a very literal sense, the world's first ticker tape. It was a primitive, dusty version of the Blinken numbers we see on CNBC today. This system was so successful that it quickly spread to nearby Italian city-states like Florence and Genoa, creating a network of early financial hubs. By the 1500s, the focus moved north to the Low Countries, specifically Belgium. In the city of Bruges, there was a family that would inadvertently change the language of finance forever, the Van der Bourse family. They ran a very popular thing called Bourse. Because Bruges was a massive hub for international trade, merchants from all over the world stayed at this inn. Eventually, they stopped just sleeping there and started doing business in the square right outside the front door. They traded debts, commodities like wool and pepper, and various currencies. Now, the Van der Bourse family had a coat of arms featuring 3 leather purses, which was carved right into the front of their building. Because of this visual, people started referring to these business gatherings as the Bourse. The name stuck. To this day, if you go to France, Belgium, or even parts of the Middle East, the word for stock exchange is not exchange, it is all because of a 16th century innkeeper with a cool logo on his house. Eventually, the action shifted from Bruges to the nearby city of Antwerp. In 1531, Antwerp opened what many historians call the first purpose-built stock exchange building. It was not trading stocks, yet it was mostly bonds and promissory notes, but it was the first time we saw a dedicated building designed specifically for the hustle and bustle we associate with Wall Street. But the real big bang of the stock market happened in 1602 in the Netherlands. At this time, the world was obsessed with spices. Nutmeg, cloves, and pepper were worth their weight in gold. To get them, you had to sail from Europe all the way to the East Indies. This was the ultimate high-risk, high-reward venture. A single voyage could make you a billionaire in today's money, but the risks were terrifying. You had to deal with massive storms, tropical diseases, and literal pirates who were more than happy to steal your cargo and sink your ship. If a merchant put all his money into one ship and it sank, he was ruined. To solve this, ship owners started looking for investors to back the trip. If you gave a ship owner some money to buy supplies, you got a percentage of the profit when the ship came back. This was the birth of diversification. Instead of putting all your money on one boat, you could put a little bit of money on 10 different boats. If 9 sank but 1 came back full of gold, you still made a profit. This idea was so successful that the Dutch government decided to consolidate. They formed the Dutch East India Company, known as the VOC. The VOC was revolutionary because it was the first company in history to go public. Instead of backing a single voyage, you bought shares in the entire company. This provided the VOC with permanent capital money they never had to pay back. In return, investors got a piece of paper, a stock certificate, and a share of the profits, which we now call a dividend. For the first time, a regular person could own a tiny piece of a global empire. The VOC became so powerful that it actually had its own army, its own navy, and the power to strike its own coins. At its peak, it was worth the equivalent of $7.9 trillion in today's money. That's more than Apple, Microsoft, and Google combined. However, wherever there is a massive amount of money, human nature eventually takes over. In the 1700s, the action moved to London. Back then, there was no formal London Stock Exchange building. Instead, brokers and investors met in coffee houses, specifically places like Jonathan's Coffee House in Change Alley. It was in these smoky rooms that one of the most famous financial disasters in history was cooked up, the South Sea Bubble. The South Sea Company was granted a monopoly to trade with South America. There was a problem. Spain controlled South America, and they weren't exactly keen on letting the British in. The company had almost no real trade happening, but they were world-class at marketing. They convinced the public that riches were just around the corner. Even famous geniuses like Sir Isaac Newton got caught up in the hype. People were selling their homes to buy shares. Other copycat companies started popping up, including one that famously described itself as a company for carrying on an undertaking of great advantage, but nobody did know what it is. People were literally buying shares in a company without even knowing what the company did. In 1720, the bubble finally popped. The South Sea Company's stock price collapsed, wiping out the life savings of thousands. The British government was so embarrassed and angry that they passed the Bubble Act, which essentially banned the formation of new joint stock companies for over 100 years. It was a massive setback for capitalism, all caused by the same thing that causes market crashes today: greed and fear of missing out. It is wild to think that the multi-trillion-dollar global market we see on our phones every morning started with debt collectors in France, a chalk slate in Venice, and a Belgian in... The technology has changed, the speeds have increased, but the core of the market remains the same. It is a place where people trade their belief in the future. But I want to hear from you. We have seen that human nature has not changed much in 900 years. We still love a good hype train, and we are still terrified of pirates. If you could go back in time to the year 1602, would you have been brave enough to put your life savings into the Dutch East India Company? Or would the fear of shipwrecks and pirates have kept you on dry land? Let me know your thoughts in the comments below. If you liked this video, give it a thumbs up and subscribe.